What's good, guys? In this video, I'm gonna be showing you guys the only winning forex trading strategy. Let's get into that now. Guys, this is an illustration of what I'm about to show you on the charts. So for this part, we have the part 1 here and we have the part 2. So in this video, I'm only gonna be talking about the part 1. Then make sure you watch out for the next video. I'm gonna be explaining part 2. So let me show you guys what this means here for the part 1. So this is what we call a key resistance zone, and now this is what we call key support zone, right? So for this key resistance zone, what you do here, you sell here. For key support zone, you buy here, right? So in the key resistance zone, using this illustration that is shown here, you can see that it's a zone where there is multiple rejections, at least 3 minimum rejections or more. The more the rejection, the stronger the level, and that's what makes up a key resistance zone. For the key support zone, this is what makes up the key support zone. At least there should be 3 minimum rejections or more. Remember, the more the rejections are in that same zone, that means the stronger the zone. You all get what I'm saying? So let me show you guys what this is all about in the chart. Okay, guys, so let's get to the chart. Let me show you guys what key resistance zone looks like and also how to trade the key resistance zone. So let's get into the chart. As you all can see, this is the chart. This is GBP USD. Remember, this works in all pairs, but this one is GBP USD, and here we are in the 4 hours time frame. It works in all time frame, but my preferred time frame is 4 hours time frame. Okay, so you can backtest it in other time frame to see how it works another time frame. Okay, so looking at this now, you can see here we have this zone here, this key resistance zone, where we have multiple rejections. You can see this key resistance zone here, we have multiple rejections. 1, 2, 3. I told you guys 3 minimum rejections or more. But here we have 1, 2, 3, 4, about 4 rejections, 4 solid rejections. So this is the key resistance zone. This is an example of a key resistance zone. So what happens here is that if, for example, when you highlighted this, and let's say, for example, the market is still below this level, so all you need to do is for you to wait for the market to get back to this zone. So once you see the market getting back to this zone, all you need to do is to take a sell. For example, since the market is pulling up here, all you just need to do is for you to wait. Once it gets back to this zone, you take a sell. It can be either in the middle of the zone or any part of the zone at all, as long as it's in the zone. You get what I'm saying? So you can take the middle of the zone. So you just take a sell to the downside, the stop loss. Make sure that you go for at least 1:2 or 3 risk to reward ratio. So as you all can see, look at what happened here. It didn't work out here. You can see that the market hit our stop loss. And once it does this, just know that the market wants to break above, retest, and make new highs. For example, I just want to show you guys, look at what all it wants to do. Once it does this, just know that the market wants to come to that level. For example, wants to break the level. If this is the key resistance zone, retest to the level and does what? Goes up. So that is what is likely to occur if the market did not reject and sell from this key resistance zone. So let me show you guys. You all can see what happened here. So the market broke above this zone here. So all you need to do is for you to wait. Since you took your sell and it didn't play out, just wait for a retest in that same zone. You can all see what happened there. The market quickly came back to this zone, and you can see the retest. Beautiful retest here. Then you can put your stop loss below structure. Then boom, you can see the market short and move to the upside. So this is how the key resistance zone works, right? So I'm going to show you guys how the key support zone also works. So let's get into that now. Okay, guys, for the key support zone, so I'm going to show you guys for the key support zone. So this is still the same GBP USD. As you all can see here, we have a key support zone here. We have a key support zone here. Very beautiful support zone. You can stretch it all the way to the current market price. Okay, let's do that now. You can just stretch it all the way to the current market price, and you all can see what happened in this key support zone here. You can see we have 1, 2. We have 1, 2. Okay, we need to take this one a little bit up, just to. This is a zone. Remember, it's a zone. So as you all can see, you have 1 rejection here, 2, 3, 4, 5. We have about 5 rejection. Remember what I told you, the more the rejection, the stronger the level. Note this down, the more the rejection, the stronger the level. So this is the key support zone here. So if, for example, when you mark that this zone and maybe the market is currently above this zone here. So all you just need to do is for you to wait for the market to get back to this zone. So once the market gets back to this zone, boom, you can say, okay, I'm taking a buy since the market got back to my zone. And you can see what happened here. The market did not reject from that zone. Rather, it broke below this zone. So if it breaks below this zone, it's totally fine. So that's what I'm about to show you. Like I showed you for the key resistance zone. Remember, this is still the key support zone. So for this one now, once the market, maybe for example, this is the key support zone, right? And maybe the market is currently trading above that zone. And what you're waiting for is for it to get back so that you can buy. But if, for example, the market go back to this level and maybe eventually broke below it, all you just need to do is for you to wait, because what the market will do is for it to get back there, retest, and then continue to the downside. So that is what is likely to happen. So for example, you all can see what happened here. The market came there, we took a buy, but it hit our stop loss, which is totally fine. Always remember, you have to go for 1:2 or 3 or more risk to reward ratio, so that even if you lose one and wins one, you're still in profit. You get what I'm saying? So let me show you guys now. So you can see the market currently broke below it. Okay, then all you just need to do is for you to wait. You can see it broke below this zone, closed below this zone. All you just need to do is for you to wait for the retest, and you can see what happened. The market came back to that zone, and you can see we got the retest, and the market sold to the downside. So once the market gets back to that zone, note that you're taking a sell, and you can see here, you take a sell, a stop loss above structure, boom, you can see what happened here. The market sold to the downside. So this is how it worked, and you can see what happened even in the future. Later on, the market still came back there. There was still another rejection. You can also take these cells. You can also take these cells. You can see another rejection there. Okay, so the same thing happens. Now, the same thing happened in this area also. You can see when the market got there, it's still rejected and so to the downside. So this is how this key support and resistance zone works. So I just wanted this video to be a very quick one. So make sure you subscribe to my YouTube channel, like the video, and also click the bell notification button so that you get notified whenever I drop a new YouTube video. So thank you all for watching. Peace out.